Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, great to talk with you. Interesting day in some parts of the market, but the U.S. stock market is, I would say it's a little sleepy since we last spoke. Not much is really happening there.
Is that a warning sign? Has it topped out?
No, not necessarily. This time of year in the summer, it often activity dies down. I mean, we had a tremendous rally last year, and there's still continued strength in the Dow and the S&P 500. But now, they haven't really done much in a month. I think the main thing that's happening is that we're still seeing what some are calling a great rotation out of some of the big cap technology stocks, the popular stocks that make up much of the Robinhood top 100 list. Funds such as the ARK ETF own these stocks. Things like Peloton, let's say, or DraftKings, or stocks that were red hot last year. Now they've been falling and still are trading very weak. The ARK ETF, for example, is still below its 200-day moving average. And the NASDAQ today, when we're speaking, is actually down, and the Dow is up. And this type of relative weakness of some of the past winners of last year that many small investors in the U.S. are enamored with, and things such as the Dow, in some other defensive sectors, in cyclical sectors of the market, I think is just going to simply continue going forward. I think this is a great rotation that didn't just start and stop, but is going to simply continue. And part of that is a move into commodities and energy stocks, which today are among the top U.S. sectors, up the most.
The Toronto Stock Exchange hitting record highs. Is that being noticed in the U.S.?
It's not. It should be, but it isn't. And it's also an indication of where much of this great rotation is taking place, because the Canadian market and economy, energy, commodities has a lot to do with it. And I would expect the strength in the TSX relative to the Dow and the S&P, and especially the NASDAQ, to simply continue. And the reality is that most world markets are now trading better than the U.S. market is. For example, the DAX, the German stock exchange, also traded at a new high on the 31st. But if you go and look at the EWG ETF, which is available to Americans, that's an ETF to invest in Germany, it's going up faster than the DAX is. In fact, today, that ETF made a new high, whereas the DAX is not making a new high today. And the reason this is happening is because the U.S. dollar index is trading down. And when the dollar goes down, if you're an American, other foreign markets tend to perform better because they're priced, in euros or the Canadian dollar and so forth. So if we look at the Canadian dollar, it's trading around 83 cents, and in November it was about 75 cents. That's a gain of approximately 10.5%. But what it means is if I'm an American and I invested in a fund that's in the TSX, not only am I benefiting from the TSX going up, but I'm getting an extra 10% boost from the Canadian dollar doing better than the U.S. dollar. And this is a factor that very few Americans right now pay attention to, but I think they really should if they want to do very well in the markets, especially over the next 10 years, because I think this trend of the dollar trading weak is going to be one of the biggest features of the rest of the 2020s, much as it was in the 1970s. And not coincidentally, in the 1970s, commodities, energy, gold, and silver did very well, and I expect that's going to be the case going forward. I mean, it's been the case since last spring when commodities made a secular bottom. If you can remember, that's when the oil futures went negative for a brief amount of time. But so did agriculture commodities. They didn't go negative, but they made major secular lows. And now we're starting to see here in the States, food prices are going up, meat prices are going up in the grocery stores. But American investors are making no meaningful moves despite these trends happening in the real world. They're still so enamored with these big cap technology stocks and fad plays that make up ARK and in the Robinhood ETF that they're ignoring it. And also crypto has mesmerized so many small traders. Going into the end of last year, there were about 1.9 or 7 million people with Robinhood accounts who had traded crypto, and now that number is close to 10 million as far as the last quarter. So that's where the interest among the small investor has been, crypto in the States, and also strange plays like GameStop, which we talked about earlier this year, and now it's AMC that's been jumping up this week. So this is what gets people's attention. I don't think these can be considered good long-term investments to make by any stretch of the imagination. Crypto, is trading down. It's almost down 50%. It's below its 200-day moving average. It's lagging the S&P 500, lagging the Dow. Crypto people talk about being a hodler, HODL, but that's not a good winning strategy. I like to be where, what's outperforming the market, because if you want to beat the market, you want to be in what's outperforming it. And many other sectors that few are paying attention to, but we do, are.
Now, Mike, you tend to be a great deker, which is the hockey term for, I guess, out juking the other guy. Americans understand football talk. A lot of them don't understand what the word deke means, although U.S. hockey fans are increasing. But anyway, you take a look at where things are low right now and where they're starting to go up, not where they're high. So, why do you think a lot of investors don't do that, what you do?
Well, I think when I started trading in the markets, it was in the 1990s. And I went and bought a bunch of books, about value investing, technical analysis, and charting. There's a classic book, Secrets to Profiting in Bull and Bear Markets by Stan Weinstein. And he advocates getting in early in a bull market. And, other than that, in the popular financial media, there was a lot of discussion about buying like growth stocks. How to Make Money in Stocks was a big seller back in those days, and that's put out by William O'Neill. He wrote it. He founded Investors Business Daily, and it advocated buying stocks that are, growing their earnings in the past 2 quarters, and also in the top 90% of performance in the stock market. But they had to have both of those, not just simply one. And now, in the past couple of years, there's been more and more of a focus among the new people who are getting into the markets, which I'm saying I was one of those in the 90s, but back in those 90s days, there was a lot of talk of here's fundamental metrics or patterns that you want to look for. And Warren Buffett was held up as someone, to look up to. There's another book, One Up on Wall Street, that was a big seller back then. But now, I think what people are just so focused on, particularly those who got in the market since the market dumped last spring, is daily price action. If you bought, let's say, you got into the market in May of last year, which is when most of these people started to get in. They didn't do it on the bottom, but after it bottomed up and already came, way off the low, what ended up happening was these people started just buying what was going up the most in any given day, and stocks such as Hertz, Norwegian Cruise Line, some of the airline stocks, some of the casino stocks. They were the first, so some of these meme stocks that people grabbed onto. And what's going on is these stocks really they didn't have good fundamentals back then. Most of them don't now. So people are focused solely on price, and what it's doing in a very short-term basis. Whereas when I talk about technical analysis, I'm looking at patterns that take, years to play out. Not, this is up today, so I'm going to go buy it. I want something that's been falling for several years and then has a move off a bottom and then, takes time to consolidate, then breaks out again. To me, that's the best buy point. But those buy points weren't there, or those kind of patterns weren't there, let's say in May, when all these new people got into the U.S. stock market, millions of people, probably around 15 to 20 million to be specific about it. So they're just chasing what's up the most. And that type of behavior is also what you see in the crypto market. There's a fascination with, there's 10,000 crypto coins. There's no difference between one and the other that anyone has shown me there's any difference. They're just collectible coins, What's the difference between Tron and one of these other random ones? They're just prices that move, and that's what people see them as. And they just jump on and, when they see it go up. So the GameStop phenomena that happened earlier this year, it was the same story. Here's a company, awful fundamentals. I got a GameStop store a mile from my house, and no one's ever in there. You wonder how they even stay in business, and buying games and taking them home. That's something people don't really do. They download the games now. But that stock, went from roughly $6 at the end of the year to close to $500 in less than a month, and became the news of the week. It made national news, not just the financial news. And what got people interested in it was simply that it was going up on, every single day, a huge amount. And that's the kind of behavior that people are focused on in the market. Just what is up the most today? That'll end, when, there's a bigger correction than we've seen. We saw one in, the NASDAQ in, February and March. It fell to its 200-day moving average, about 15%. And then in April, it came back down again, a little less than 10%, hit the 150-day moving average. It's still trading weaker than the market, than the S&P is. So I would say if that were to decline again, and I think it easily can before the year is over, then perhaps some of this behavior of just being focused on these meme stocks and what's up the most in any single given day will eventually come to an end. And Bitcoin also, if it continues to trade as weak as it is, that also will eventually cause people to look for different ways to make money and focus more on fundamentals and sectors and things that have a more sustainable move to them. If you can buy something, if making money in the market is easy as loading up a Robinhood app, seeing 5 stocks up a lot in any given day, not knowing any idea of really what they are, what the valuations are, what the chart even looks like, but just buying them and then making, having a 50% chance, let's say, of making that work when you get out the next day, people will keep doing it. But once that sort of strategy stops working, or tactic, then people will stop doing it and look for new ways to make money. So I think that's what's going to be necessary, and it will happen. I mentioned the 70s a lot as a comparison to what's going on today. And back in the 70s, there's a group of stocks called the Nifty 50 that really peaked out around 1968. But people were very enamored with them, and they were like the momentum stocks of that day. But then in 74, there was a horrible bear market, and those stocks lagged for over 10 years. Even when the stock market went back up, they continued to lag. And I think what happened was a lot of people eventually got out of those stocks during the course of the 1970s, and they were the people who got later into the gold, silver, and energy game. So I think, these people will eventually get into gold, silver, even small cap mining stocks, but they're going to be late to it, and I believe in getting ahead of them.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, oil is at a 3-year high. Why the new demand?
Well, it's interesting what's happening with energy stocks and oil. They're kind of separate. But with oil, I just think we saw a secular low in commodities in general last year, and I interpret the rally since then as the start of a new bull market. So the trend is up, is the point of making that comment. But also, there's talk of higher transportation costs because the shipping industry got disrupted earlier this year, and there's been production that's come offline from time to time. Iran still isn't producing oil in the United States. I think there's somewhere in the United States, I think it's Texas, but there's a giant oil refinery that's gone down, and this happened with a hacking event a couple of weeks ago also. But there's some temporary slowdowns and disruptions, but I think the big thing is that the number one factor is that central banks around the world are printing more and more money because governments are going deeper and deeper in debt. And this trend now, unfortunately, is being led by the United States. So I think there's a need when this happens for people to get out of simple dollar-denominated assets or currency-denominated assets and into commodities, which represent real things, so to speak, physical things. So I think it's also why real estate may be going up too, or part of the reason. So that's how I interpret the reasons behind oil. But one interesting note about the energy stocks that is worth making too is last week there was a story that Exxon lost one of its board of directors, an activist hedge fund, and BlackRock came in combination and put on the board of directors of Exxon a believer in green energy who wants to transition into that faster, which would, in theory, hurt Exxon's profits. And similar things are under the works of Chevron. So this was bearish news for these two energy stocks, but they didn't drop. And today they're up pretty good. I own a position in both of them, but I also own close to 40 energy stocks. They're not important positions in these two for me, but I'm just bringing them up because they had bad news, and the stocks went up, and the sector went up too. You know, in theory, that bad news could hurt all energy stocks, but they ignored it. And that's the sort of thing you also see in a bull market, or when a sector is very bullish, is bad news is ignored. So, you know, that is not to say they're going to go straight up, you know, from here on in. We've had a tremendous move in these stocks. I mean, Exxon was below $30 on its low in November, and now it's 60. I mean, it's gone up 100%. So I wouldn't be shocked if it just sat around 60 for the whole summer or even all year from, you know, but the overall underpinnings are bullish for commodities.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.